The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour, Monday edition, Monday the 17th of March. My pleasure to be here after 2 great hours of Steve Rhodes and programming all day. Let's go through to the market as it stands right now. The Dow is up 162 at 16,228. The S&P is up, at this point, is up 16 at 1857. The comp index is up 41 at 4286. You've got gold down. Oops, gold down. Let me just double check. GC. I had it down earlier, and it is now up 240. And I think that right here is a very interesting point in gold. Is this an F or is this a B in the Chapman wave methodology? My thinking right here is, let me just quickly finish this up here on the 120-minute chart to show you what I'm looking at. That's a down arrow. That's an up arrow. And that goes A. Oh, I hit the up arrow by mistake. Oops, there it is. A, B, C, and D. And the technicals were failing miserably when it made that D. Let's see what happens, because if gold between now and tomorrow, about this time, between 11 and 12 tomorrow, is underneath, and it's going to be very important, is underneath 1375, that is the June contract, then we've got to anticipate that it could get to the 1368 low of the 14th. That was just a couple of days ago. And if it touches that, then you're looking at 1365. That whole area is going to be major support. And one of the reasons why I say that is because when you're looking at when in particular this 120-minute chart, when you're looking at the stair-step move to the upside, it's been determined, but it's been determined with weakening technicals. In the daily chart, it's a little different, and how quickly the stochastic at 91% pulls back underneath 87 to 85 is going to be very important. This is my suspicion that we are making just a very short-term top in my opening call service for my subscribers. There's nothing, we're not buying the DZZ 200% short gold. I just watching it closely. Why? Because the action has been so strong. The political conflicts are still out there lingering. And my suspicion is that if there was a pretty sharp pullback, I would be looking to buy the gold contract in one form of an ETF or ETN or another. So silver right now is down 4 cents at, gold is now only up 20 cents. And silver is, let me just double check, down 4 cents at 21.38. Platinum's at 14.71. High-grade copper is stuck at $3 there. This is going to be very interesting watching that, because if it goes under 2.90 at any stage this week, that's going to be very negative. Otherwise, it's just in this little trading, not a little, in a rather large trading range. Crude oil is at 98.22. It's pulled back quite sharply since the recent highs in the 102, 103 area. You've got bonds down 8.30 seconds at 133.07. Dollar is down 10 cents. And you've got the euro holding nicely, but just holding. It's not up very much. Now, there's just one thing that I want. Let me just show you something here. In the is this the wrong 5-minute chart? Is it this one here? Yep. In the 5-minute June E-mini, it went to a peak E at 4:30 at 5 o'clock on Friday. Went sideways once. It went sideways for most of the rest of the day, and then on when the market opened last night, the futures kind of held okay, and then plop, went down very sharply to the 18, oops, the wrong one. Let's go there. right here, and then went all the way down to 1823.50. Now, what's really interesting about this in this last move up, this move from on the 17th from 8:35 this morning. In the 5-minute chart, you got a peak A, B, C, D with a doji D, and that was just before it started to pull back a little bit, waiting for the President Obama conference. Wasn't a conference, it was just a statement. And started to pull back sharply. Now, how would you know, if you were trading the E-minis, how would you know to short? How would you know to be long? Well, if you use just the technique, well, I wonder if I've got a naked chart here. Is that a naked chart? No, somewhere I should have. 2-minute chart. Got a naked 10. All right. Well, if you were just looking at patterns, price patterns, the little silent doji that you got after that 8:35, 35 minutes Eastern time, 35 minutes past 8, as it went up, the moment it crossed the resistance at 1843.75, you could have considered that it was going to tackle the left side high of 1845.75. But wait a minute. What happens is it continues high. It goes peak A. Now, in the Chapman wave methodology, what you look for is the lowest, most obvious low bar. You don't know that until you've started moving higher. In this case, you started moving higher. You went to peak A, B. Each successively higher peak is named with an uppercase letter on the way up. A, B, C, and the objective in the Chapman wave methodology is to always get you to at least a peak D, because at D you can E, D or E, you can find yourself seeing quite a bit of a retracement. Well, what does it do? It goes C, and then it goes to a D, right at 10 past 10 this morning Eastern time at 1855.75. And then it pulls back. Now, how would you know you're short? Well, I'm going to be teaching the methods that you can use in any time frame. It is on the MACD. Here it is. Now, I wonder if I can find it. Am I going to hit the right button here? There. Front page. If you go to the front page of TFNN, you'll see that it says Subscriber Webinar by Basil Chapman. Get the opening call and get it free. Get the opening call and get a free webinar. Subscribers to the opening call will get a free webinar by Basil Chapman teaching how to use the MACD and the slow stochastic. That stochastic is more a leading indicator than the MACD, because the MACD uses slower parameters, look-back period. Now, in the subscriber-only webinar on the MACD and the slow stochastic, if you go to the front page and you click right there, you'll be able to sign up. You'll be able to get my opening call for 1 month. We've never done this. It's a 1-month trial subscription to my opening call. It's a $128 value, absolutely free. If you sign up and you want to go to my webinar, because if you sign up and you start getting it Thursday night, 6:30 p.m. Eastern time, you'll be right in there looking at this webinar. Why is this webinar so important? I've done a webinar like it before, a much more substantial in time webinar, but I'm going to refine it to the point where I can show you some things that are current right now. And that'll be right now into Thursday, of course, Thursday evening. And look, when I was talking to you, I showed you that using the MACD and the slow stochastic is a big help, because look what happened at peak C right there in this 5-minute chart of the E-minis. When it went to 1853, the stochastic was at 90, the slow stochastic was at 91. When it went to peak D, the slow stochastic was lower at 90.14, a negative divergence. Look what happened last time when it went to a D back on at 4:45 this morning at 1844.50. The slow stochastic was at 90. Oops, I'm sorry, I didn't mean 90. That's going to be over there. Slow stochastic, I should be able to find it. There it is. So the slow stochastic is at 96.67. When it went higher to peak E at price time at 5:05, look what happened. The stochastic was down at 91.77. I'm going to explain how this works what you're looking for, how you can use that fast-moving average, how you can stay long, and why you use the Chapman wave to get your turn together with a slow stochastic many times. So those are very important, and I'm going to be spending time on Thursday night for that hour going through all these different aspects of the MACD, moving average, convergence, divergence, and the slow stochastic. Now, a couple of things that I wanted to talk about. In gold, you'll see that we've got that divergence. So I'm watching closely to see if gold is going to pull back, and it doesn't have to pull back all that far because it's had such a strong move. But I'm suspecting that the 1335 level, that's 40 points, over a period of a few days, that's going to be key. If it does pull back, that's the level I'll be watching, but I won't even anticipate that it can get to, let me double check, that's the level 1355, that's what I meant. Sorry, that was a mistake. I meant 1355.30, that's the level. I knew that was a little high, 1355s. Now, why? Because 1361 is the 9-period exponential moving average in the gold contract, and it hasn't even turned down yet. So that's the first level to break. If it does break, then I'm looking at 1355. Now, what happens if this is a period where gold is considered to be, how can I put this? I usually talk about it. Gold is, in fact, a currency of fear. And that might be the best way to look at this. Gold, in fact, is a currency of fear. And because of that, excuse me, because of that, there might be less of a pullback than one anticipates because other people in other countries are buying gold. So I'm going to be watching this real closely. Now, a couple of things. I had a question about, Jane the Den asked about FB. Sure, we'll look at FB, Facebook. Facebook is pulling back. It's at 67.11, having made a peak. I went through charts over this weekend. Between Thursday, Friday, and over the weekend, I went through all the Dow stocks, and right now all the Dow 30 stocks are higher. But believe me, this is going to be a very interesting period. Facebook is, of course, a New York Stock Exchange stock. It's at peak D at 72.59. Look at this is typical of what I'm going to show you on Thursday night. For those of you who are interested, imagine you're getting everything for free. You're getting a month for free of my newsletter. Very comprehensive newsletter. We've done very nicely on our shorts. Took a profit in one of our shorts, and we'll be adding back to that. We already we have a core position. We're only playing with keeping core positions and using our trading positions to lower the buy stop or the stops if they are 200 or 300% long the inverted index. So look. The slow stochastics, this is what you're going to get. I'm going to show you how you can use these particular tools. Look how poor Facebook technicals are. But you're about to test, and this is very important, the left side low of 66.51. We'll be right back straight after this break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. The Dow's up 157. S&P's up 15. We're going to go to Bob in Runson, New Jersey. Hi, Bob. How are you?
Good morning, Basil. I'm fine. And yourself?
Very well, thank you.
I wanted to mention something. I've been this is not why I called. I called about IWM, but I've been using the Chapman wave for about 7 years, and I can't tell you how much money I either lost or didn't get as a result of not understanding the stochastics and the MACD. In other words, I could have stayed in trades when it got to a peak D. If I had known better, I'm going back years ago, 5, 6 years ago. And it's critical that you understand the stochastic and the MACD. It can keep you in trades when, you know that, but.
Well, you know what's interesting about it, and I concur. In fact, I've got the chart up now of Facebook, the 120-minute chart, which went to a peak E, the very last fifth highest peak that it went to at 72.60 at 11:30 on the 11th of March, and the MACD made that M pattern that I often talk about, and then the beta between the green line and the red line, the distance between the shorter moving average and the slow moving average, expanded as the histogram, those little red lines, anyone looking at Tiger TV, you can see right there, expanded, and the stochastic came down. And now what's happened is that Facebook has gone in the 120-minute chart almost to the level where the support was at 66.51. The low today has been 66.70, and my target for this, there's a left side, right side price time match, which says on the 18th round about this time on the 18th, that's tomorrow, it should be testing the 65.72 or sometime close. So yeah, you know, it's a fascinating. It took me so long over the years because everyone used to say to me, why are you using the MACD and the stochastic? Those are lagging indicators. And I used to say to them, with the Chapman wave together, with the notation of D's and E's on the upside, if you use the stochastic in a particular way and you place it in a particular situation, in other words, I always place it below the MACD, you'll get a picture of the divergence. And in fact, it doesn't become a lagging indicator. I can show you instances right here. In fact, Facebook weekly chart, I'm just arbitrarily picking it up. On the 29th, the week of the 29th, it made a low of 43.55, and it turned around the very next week with a low of 46.26. So that's just one bar, and it was already on its way. So it's how you put these things together, and I do appreciate your comments, and I'm one of those that
I should have explained it wrong. You know, in the beginning, you know, everything in life has a learning curve, you know, and I think when people initially see the system you use, what gets ingrained in their mind is the ABCD, the restart, but they fail to take all the little tools that go into the toolbox, because these two variables that you're speaking about can keep you in trades.
We know that from my newsletter. We've managed to do that with a number of positions, and now we've got the short side. I don't know if we're going to be able to do the same on the short side, but there's every possibility and every chance that the same methodology on the downside should, in fact, be working, certainly on the daily charts. So I really do thank you very much, Bob, for your comments.
Well, I think that it's important, because if people use the Chapman wave, they can't miss a seminar like that, because it'll really help them. I can't stress it enough, but I wanted to speak to you about IWM.
Okay.
It's lagging the general market today, and I was lucky enough to notice that, and I went short, not at the high of the day, at around 118.70 or so. And
that's very good. Good. So you know what?
I speak to you about so many different stocks. There's so many things happening. Very interesting time in the market here.
It is a very interesting time, and as I said before, I went through all 30 stocks of the Dow, and everyone had either already, like Verizon and Telephone, AT&T, had already given sell signals, but of the most recent ones, virtually all were coming down after a peak. D or an E in their dailies, and the weeklies were also turning down. So this to me says you've got to anticipate very abrupt, very sharp, and this. Oh, there's the music. So can you hold on?
Sure.
Okay, good. So what happened on Friday is that we had a caller, Lou from Nashua, and he wanted to go short the E-minis, and I said, you've just got to be careful about those abrupt moves to the upside. Look how abrupt it's been. We'll be right back. We look at the IWM, the Russell ETF, straight after this break. Dow's up 142, S&P's up 13.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, folks, we're back. Now it's up 143, and in fact, it's given back quite a lot of gains. It was up almost 180, 190, I think, at one point. So, okay. Now what we're looking at, just wanted to check something. Yes, in the IWM that Bob wanted to know about, Bob got a great short position up at the high at 118s. It's now at 118.10. You've got a peak B in the 120-minute chart. The MACD has just barely crossed positive. The histogram is starting to move higher above towards the 0% line. The stochastic is rallying. The on-balance volume is moving higher. And what I'm looking at here, and this is going to be really interesting, what we want to see is what happens by about 3 o'clock to 3:20 this afternoon. Let me explain what I'm looking at here. If you're looking, I'm just quickly going to shoot it into the VIX index to get a check. There you are. The VIX made a peak E, confirmed on Friday. It's gapped down. It slipped all the way to the 15.37 area, but now it's back at 1606. My suspicion is that the VIX is going to remain fairly high, but the real issue is how does it handle the high 15s to the 16s by later this afternoon? It's already on the 9-period moving average. It's touched the 1552 level, bounced off it, and this is going to be critical because it's a peak C if there's no new high today above 1822, and I'm still expecting a leg D to unfold. So that tells you about the volatility index, which means that I can go straight to the IWM and discuss it, although the VIX is really based on the futures market of the New York Stock Exchange. Right now, I'm treating it as a market, a very comprehensive market tool that we can use. The most important thing about the candle that I'm looking at in the IWM on the daily basis, and in fact, we've only just passed the first 2 hours of trading, so to talk about it as if the day is done would be very silly. But most importantly, what I wanted to do is I wanted to say, in terms of the trends that we're looking at, the daily has gone from a sell signal to a sell mode. It remains in that position. And that's not to say that from the level of the low of Thursday, not Friday, but Thursday at 116.38. You see, Bob, you had said that you thought that the IWM was lagging. In fact, the IWM has been really interesting because of two reasons. There have been times over the past 2 months where it was leading, and then all of a sudden there was a time where, especially because it made its high, I think on the 4th of March, and the general market went all the way to the 7th, it looked as if it was lagging. But in fact, what I'm looking at is that our 3 to 4 major indices, the NASDAQ, I'm calling them the NDX 100 or the Qs, the Dow, the S&P, and the IWM, and I should include, say 5, I should include the New York Stock Exchange, are rotating in very interesting ways here, because if you look at the IWM, it's come down for 1, 2, 3, 4, 5, 6, 7, 8. We include today as a 9th day. If you look at the diamonds, the DIA.
I just meant for today, though.
Is this an intraday trade?
Yeah, in other words, well, I'm not necessarily in this trade for just the day, but I meant, in other words, today.
Yes.
Right now, if you look at the market, you got the Dow's up 0.82%.
Correct.
The S&P's up 0.69.
Right. So
the IWM is lagging that. It's up 0.3.
Exactly. Okay. So I just wanted to point out the rotational effect, because intraday a whole bunch of things happen. But what you want to look at is the kind of candle formation here. In the 120-minute chart, that inverted, it's a little bit like an inverted hammer. That candle with a close, if there's a close in this 120-minute bar underneath 118.02, then immediately you have to look at the 9-period moving edge at 117.66, which is perfect for what you're wanting. So
yes,
I'm going
to my stop, that high B bar on your screen.
Okay, so all I wanted to say to you is, in this particular instance, I think your entry was perfect, because the MACD is not making a wide beta, and this is what I'll be talking about on Thursday night, between the fast-moving average, the green line of this 120-minute chart, and the red line. In fact, it's flattening out. So if there is a slide towards 117.55, maybe 17.65 to 55 over the next 2.5 hours, without taking out, say, 118.25, 118.33, I would say to you that this is a rally failure mode, and they did in 2 hours. Actually, it's not even 2 hours. They did it in 1.5 hours, which is what I was anticipating would take us until tomorrow afternoon, Tuesday afternoon, to get to, and going into Wednesday morning. And I thought it would be a 1.5 day pullback. And the Dow is 16,237 is the 9-period moving average resistance, and it spiked above it to 16,270, and then it's pulled back. I think you have, let's put it this way, if ever there was the potential for a really nice trade, the next 2 hours are going to tell you whether or not you hit it exactly with almost a home run. Why?
Yeah,
because if there is weakness, instead of this assessment now that there was a short squeeze, right now, at this particular point, from now, 11:40 Eastern Time to about 12:05, some money managers will be assessing the situation and saying, you know what, I think that the short squeeze is over. If the market holds here, I'm going to do some nibbling. If it starts to slide, they're going to get really scared. If they do the nibbling, and then later this afternoon, instead of having a late-day rally, there's a late-day sell-off, those fund managers will get out of those trades like lightning. I think you've got a great entry point. You're up at almost $1. And what I would just suggest to you is that some part of your position, I would say to you, if it gets to even 118.39, 118.42, I'd say just tighten up your stop with one of your positions.
Yeah, I agree with that. I mean, there's so many stocks. Like, I don't know if you've looked at American Express.
I did a whole bunch of work on American Express last night.
Yeah.
American Express,
it's difficult on the long side.
And they've all, in their 120-minute charts, they had a very quick ABCD, quick move up. American Express went to 94.35. The daily is in peak E. The daily is in a sell mode. The weekly is so close. I have to wait until Friday afternoon, unfortunately. But I'm looking at this, and I'm saying if American Express slides under 89.22, I'm pretty sure I'm going to get a sell signal in the weekly chart. But that's anticipating. I have to wait. But yeah, there are a lot. I went through all the Dow stocks, and UTX having a great day early this morning, and it's got a huge move from 118.50 down to 112.32. I have to tell you, this is looking quite bad for many stocks.
Yeah, Home Depot's another one down today again. And
Home Depot didn't even rally; it failed to rally. Oh, so yeah, I think you got the right position, and the tide has changed to going down. So these big gaps, especially the gap up rallies, they give you the opportunity to look at the short side. Right. Hey, thanks so much for calling, Bob.
Thanks for your time. Thanks for everything you do for everybody.
Well,
I can't stress it enough. And that webinar is fantastic. Thank you.
Thank you so much, and I'm really looking forward to it. So, folks, listen to Bob. Bob's recommending that that you consider my webinar on Thursday night. Let's go to Lou Nasher. Hi, Lou. How are you?
Fine, Basil. How are you?
I'm good, thank you.
Looking at the S&P again.
Okay, so do you remember what I was afraid of on Friday? That if you were to short at that particular time, even though overnight, it could have looked good, because if you were at your computer and you had shorted, you would not only have picked up some of the points on the downside towards the end of the day, but you would have got Sunday night. But if you didn't get out, and you sort of left it and you kind of didn't put a stop or anything like that, look what happened. It gapped. Yeah. It went from the low of 1823 to today. This is a huge move to today's high of 1855. That is a 32-point rally. 16 points, $1,600. Ain't nothing to sniff at if it's the wrong way around instead of making. So now let's look at this. Now your opportunity, I'm just saying opportunity, I don't know yet about a trade. The trade probably would have been just before President Obama came on to speak, because that's where we were close to the highs. And it said, you know what, if you went short in the 1853-ish area, you could put a stop because of the potential for the downside. You could have put a stop at 1856, which 3 points, even 4 points in a move that you're expecting to hold for a little while is not so bad. I prefer a little tighter constraint, but I'm prepared to accept 2 to 3 points sometimes as a stop. Now, I'm going to make the suggestion to you that you have a little bit of patience. Now, I know that you might miss the trade if I say have some patience, and then by the end of the day, there is weakness in the S&P. That's the reason why I said to Bob to put a stop in some part of the position. I just have this sneaking suspicion, and right now, it's verified only by the fact that the stochastic in the E-mini, that's the June E-mini S&P 500 future, is holding at 82%. The fast-moving average is turning down, but the MACD is rising, and the histogram is rising. So here's my recommendation. I don't know if you'll get it. At 1847, the risk of a bounce is to about 5 points at the 1852 area, maybe not making a new high on the day, but there's a chance for a bounce. I'm going to make the suggestion that the number that I'd be looking at for you if you wanted to short would be, let me give it to you now. Now, you'd be looking at one position rather than two, right?
Right.
Okay, so if you had two, I'd be able to say something that would allow you to scale in. So we have to get this exactly right. I'm going to suggest that you have a little patience and you put in a bid to buy the E-minis at 18... Oh, man, it's got to go from 47.50 to 18.51. At 18.51.50. Now, if you miss it at that point because it didn't get there, then we have to deal with it in a different way. But I'm going to say if you can get it just 4 points, 4.25 points higher, the chances are that if this market is going to peter out later, either today or tomorrow, and by Wednesday we're starting down again, what kind of stop do you usually put? Do you have is there a limit?
5 to 10.
So you'll go 5 to 10. I don't, in this market, I don't really want you to go more than 5 because I'd rather have you take 2 positions and have another 5 left over for something else. Yeah, I feel very comfortable with that. If you miss it because we've made the high in the day and it just starts to decline, it goes to 1844, then you might have to wait for tomorrow. Maybe there's another bounce attempt tomorrow. But right now, 1851.50 is the number that I would say to you, that's where I would go in. And as for a stop, 1855.75 is the high. I'd say 1856.25 would be a stop. But my suspicion is that if it goes even to 1851.50 and then bounces just a little higher and then closes below your entry point, I think then you've got yourself a nice entry. So let me just go through this again. 1851.50. You could put your 5-point stop there. That would be where you short it. But I'm also now going to add to it a time. And I'm going to say it needs to be before 10 minutes to 3 Eastern time this afternoon, between 10 to 3 and 3 o'clock. If it rallies after that time, I don't want you to go short because it might close at the high of the day. So any time from now until, I'd say 10 to 3, maybe 3 o'clock, but any time to then, if there's a rally, that's 1851.50 is where I would recommend. That's where you could sell the E-mini. But after 3 o'clock, if there's a rally, I don't want you to do it. And I will talk about it tomorrow on the show. If that doesn't come about, I'll talk about what would probably be good positions. So that's the only way that I would trade this. Now, the only reason why I'm saying that, because if it closes towards the high of the day, we might see a gap up in the morning or at least a little bit of a rally tomorrow morning.
Right.
So now, here's something else I'm going to add to it. I said 1851.50.
Right.
If it's rallying very sharply and it gets to 81.50, 1851.50 and it's rallying into that level, try to wait a little bit and wait and use a scale in as it's going higher, and then you can short within a point of that level above it.
Very good.
Okay. Thanks so much for calling. I hope it works out, Lou. Lou in Nashville. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. One of the reasons why I was saying to Lou, and also mentioned to Bob earlier, that you still have to have some stops in here, and that if certain levels are hit, you don't want to put yourself at risk at all, is that look how the market is holding at 150 up in the Dow, 14.73 in the S&P. So 0.93, the Dow is stronger than the S&P. I don't like that. I like the 500 stocks I've always liked the percentage of the S&P to be slightly more than the Dow. It usually makes me a little nervous for the end of the day. However, I just wanted to say that the selling has been pretty intense on the way down, and we've seen that with the volatility index. Let me just go to the Dow chart right here. Whoops, wrong chart, right there, right here. And because of it, and I'll go through a lot more of this when I do Larry's show for the next hour at 1 o'clock, 12 o'clock till 1 Eastern time, I'll talk about some of the commodities and other aspects that I'm looking at right now. But the selling from the Dow at 16,505 down to the most recent low of 1650, what was it, 16,046 on Friday, 16,046, 16 tons, that's what it sounds, 16 tons. And what do you get? You've got 500 points, 475 on the way down. It's not that much for 1, 2, 3, 4, 5, 6 days of 5 days of selling. And the bounce that we've just had, it went almost 50%, not quite 50%, but a pretty decent, about 40-something% from the low. It's saying to me that this is just going to be the kind of pattern that you look at that is basically lower highs and lower lows. That's what I'm anticipating. But we will not know, and I've made a big deal about this for my subscribers, we won't really know until we start to make the lower lows, whether that is really the format that we're looking at. Everything says it should be. But you know, a market like this where you've got help coming from the very person who prints the money, this is, you know, when people say it's different this time, I don't know how anybody can't deny that for the last 4 or 5 years, it has been different this time. Not the chart patterns are chart patterns, but the environment has been different because there has been this feeder to the economy, and that is the Fed. So I just wanted to talk about that we could see a little bit higher prices going into Tuesday. I'm going to be watching it closely. I hope so, because I'd like to add back to some of the shorts we took profits in. We've still got core positions. Just real quickly before we sign off this segment, going into the next one, which I will do. So Larry's show. Larry's away again. The Dow is trading at up 152 at 16,217. You see the way it tackled and then got pulled back, retraced from that 9-period moving average, which is at 16,002, I think it was 48, was it? 44, 48. That's very important. And my suspicion is it wants to hug that line just a little bit. It wants to hang around there. It wants to say, hey, remember me? I was here just like 2 sessions ago. And what will happen is that's where we will see whether the 120-minute chart in the Dow has the temerity, has the strength, has the gumption to be able to say, great, I like it. I'm going to go a little higher, or it's going to say, oh, that was just way too much of an effort for me. I've got an alternate account, G/C at the bottom. I'm going to go all the way down to make it a D. But this particular move up, the candle that follows initial move in the 120-minute chart is very important. If within 2 bars, that's within 2 120-minute chart candles, there is a push above today's high of 16,270, we will go into Tuesday, maybe early Wednesday morning. If it fails at any point, the Dow starts to take out 16,168, watch out below. So I'll be back in the next hour. Stay tuned, and if you're not, thanks for being here. I'll be back tomorrow for my usual show.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.